but I got a question for you guys. Okay, because I watch something very closely and have been for like 2 years now because I see an inverse correlation between like the yield on the 2 year treasuries and the gold price. Okay, like for 2 years now, every time you see the yields go up, gold is just getting hammered. Okay, but look at this. Look at that. There we are. Okay, it's up like 0.1% today, which is pretty big. I mean, percent wise, that's like I mean, that's a significant move. That's like 2.5% increase in the yield on the 2 year. But gold's up like 30 odd bucks. Okay, something very profound has changed in the past 3 weeks or so, 4 weeks maybe. What the heck is going on? How could yields be going up that sharply and gold is also going up? What's going on?
Go ahead, Kevin.
Oh, don't question it. Just accept it.
I'm going to answer a little differently. I'm going to say, welcome to an inflationary era. I think that's
There you go.
That's the beginning of the answer I was wanting. Okay, cool. it was a just lobbing a little big softball at you, but yes, I
know you are.
I tested Tavi on that earlier this week. So anyway, look, the tide is rising, okay, and we know that the tide will lift all boats. And here you can see a picture that kind of captures that. You can see a bunch of boats off there that are just about to get lifted by the incoming water. And then we have some boats in the foreground here that might actually start floating a little bit later, okay? As the tide goes up the shore there, it takes a while for each level of boats to lift, right?
Man, and you deserve an award for this stuff, Quinton.
It took me a while to find this, guys. Like I had to. This is what I call research. This is what a geologist does. He sits on the internet and tries to find the right picture. Okay, but the point is what like Kevin was saying earlier, and then Tavi touched on it too, is that a lot of times we don't see that that instantaneous gratification in the junior space, especially when the tide is lifting. And I'm going to talk about that a little bit more today, okay? Because I think there's some other fundamental reasons. They're just my views, okay? But I'm going to show some ideas about what I think happens in the early phase of a bull like this. But I'm also going to show how I think people can take advantage of that. I'm not a financial advisor by any stretch, but I'm a geologist, and I've been in this industry for nearly 40 years, and I've watched this cycle go through this many times, and I'm going to just give my 2 bits on the whole thing. All right. So let's go to the next slide. Okay. We've spoken about this before, where when the commodity cycle, starts to kick in gear, especially gold, and gold is rising. Okay. The central banks are driving the price like Tavi suggested earlier. But we start to see that affect that money start to come in. Now it's going to take, some other shift out there on the macro level for that money to, materialize. Okay. Like it's going to take, a bust in, a certain sector or at NASDAQ or whatever, for that money to really start coming in this way. But it usually follows like a waterfall or like that tide rising. Okay. It starts to lift the ETFs and the big miners first. Why? Because think about it. These folks that have this money and they look around, they're saying, well, where can I put my money now that I know that this has peaked and I want to make money elsewhere? And they say, oh, gold's gold's up, 13% this year. Wow. Okay. And they come over and they get on the Google, like Tavi said, and they do a little research and they find out, oh, there's a company called Newmont. I think I'll buy some of that. Hey, there's an ETF here, a GDX. I'm going to buy some of that. And then, a few days later, they start doing a little bit deeper dive because, these are not people that like to work hard. Okay. But they do a little bit deeper dive. And then they realize there's other miners, a little bit smaller miners that you could buy. So they start sticking their toe in the water there. And then, hence, so forth and so on. It kind of cascades down the ranks there. They go into advanced explorers. And then, last on the food chain is the junior miners and the explorers. Okay. So just to show this is kind of the way things work. I put some slides together. Go to the next slide. Okay, so here's a look at at stock charts, and I clipped these this morning. Okay, they probably moved a little bit since I took the photographs, but not much. Okay, so you can see a Newmont, Barrick, and the GDX. Okay, and the candles in the background there, that's simply the gold price. All right. But you can see that all of these stocks responded sometime around the 1st of March. Or probably right before PDAC, I think it was, when gold had that magic lift on the Friday afternoon. What a wonderful feeling that was, by the way. I mean, you could just tell something had shifted. Like for that to happen right before PDAC, that doesn't happen often. Usually it goes the other direction. Anyway, you can see how much of a lift there's been through that period. Now, I extended the chart a little bit further back just so you could get a sense of where these companies were at, say back in February at the low point, when everybody was going hara-kiri and thinking the world was going to end and mining was never going to ever come back. And you can see how things turn. Wow, what a shift, man. I mean, these things are up, 15, 20% or so. I can't read the numbers, but you can see the big moves. All right. So those are the big companies. That's the GDX. And that's what people usually jump into as soon as they hit Google and they look up gold, where can I invest? Boom. There's the ones that move. Go to the next slide. Okay, let's go to the mid tiers. Look, these are, just a handful. And I'm not, I just came up with whatever popped in my brain, when I decided to make the slides. So I picked a couple of mid-tier producers. One's Sentiment, one's Equinox, and then I also picked the GDXJ because the GDXJ does have a lot of mid-tier miners in it, gold miners especially. Okay, and you can see these things also moved up, but there's a slight shift. Okay, like again, about a day or two later, when people start to figure out there's other things you can invest in. All right. So if you compare, you can take your time on YouTube over the weekend. You can go back and look and, yes, oh my goodness, look at that. The jump into these companies was usually, into the first week of March, we'll call it. So a few days later. All right. But they're all up. They're all up big time. In fact, they're probably up more than Newmont and Barrick are, quite frankly. Let's go to the next slide. Okay, then let's go down the food chain a bit. Let's go to what we'll call advanced explorers. These are companies, and these happen to be 3 that we have in our portfolio that have also responded to gold price, but not quite as resoundingly as the ones I just went through. Okay, why? Because most generalists don't know about this level of investing in the gold space. It's just not like to understand. Oh, there's this big discovery in Yukon, this valley deposit in Snowline. I mean, that takes a little bit more legwork, to understand that. But people are starting to catch on. Certainly, smart money. You're seeing people pile into these things. Newfound today had a pretty good run, by the way, and I talk about that more in a minute. I think what you're seeing when you see Newfound run big on a day like this, yeah, it's partly gold, but it's also partly this magical discovery of these generalist investors out there getting onto Google and doing a little bit more in-depth research and learning more and more and more and going, wow, I got to have some of that. They find these companies, and then all of a sudden you start to see that tide catch these companies and start lifting them. Good story, especially when you got good news like Nevada King had some exceptional drill results this week. Yeah, they saw a huge lift, but prior to that, they were kind of waffling around, up a little bit, but not up hugely. Okay, but these are, you can see the timeline for these. You saw more a gradual increase in March, and then more of an uplift here recently. Okay, all right, let's go to the next slide. Now we get to talk about the junior miners, and this is one of my favorite South Park episodes. I've shown this before. It's the one where you have all the folks, homeless folks, looking for change and wandering around South Park, like zombies, looking for change. I count the junior miners in this league. Not to disparage junior mining. Look, I love junior mining. I love exploration. Don't get me wrong, but there's a lot of junior companies out there, a lot of explorers, however you want to call them, that are basically out of money right now, and they're looking for funding because they need to keep the lights on. They need to keep going. Now, I heard a stat this week, and I can't I don't know where the source came from, but somebody who's pretty familiar, a broker is familiar with the junior space, told me that of the roughly 1,500 junior companies listed in Canada, that 70% of them have less than $70,000 in the bank right now. That's crazy. I mean, that means there's something like 1,000 companies out there with barely enough money to keep their electric bill paid. Okay, so what does that mean? It means we're going to have to see some finance come to these companies. So let's talk more about this. Let's go to the next slide. Okay, so what happens to these poor companies that ran out of cash during this down cycle? The past 2 years have been brutal, and a lot of companies ran their treasury down to a dangerous level. Say sub $100,000. Some didn't. Okay, I mean, it's really on a personal level that people decide where their comfort zone is. Some companies they saw this route and they're just like, I think we're going to stop spending money. And they still have a few $1 million in the make, $2, $3, $4 million in the make, and God bless them, because that's brilliant. That's what you need. I think they're going to be the first ones out of the gate. If they have money and they can get back on their feet, yeah, they got an advantage. Okay, but there's a lot of companies, a lot of them, like 1,000 that are basically down to fumes, and they're going to need money. Okay, and the problem with that, guys, is people know it. Especially the brokers, the bankers and such, and even a lot of retail investors who are pretty savvy in this business, they know those companies are going to go out and have to do a financing. Now, I want to be really clear here, because I don't want anybody getting me in trouble here today. So I'm not going to speak about financings in any specific company or anything like that. And I'm certainly not giving financial advice here. Okay, this is my view. It's just my picture, my view on what I've seen over the years. We, just to be really clear with folks, we here at Crescat really can't talk. I mean, we're restricted about talking about financings and such on videos. Okay, like just purely, if it's a specific financing, no, we can't talk about it. Okay, like we can't be seen to be meddling with the company or trying to manipulate stock or whatever. That's not what we're about here. In this case, I'm just simply presenting a view of how I see, a typical junior mining company that's kind of on its back, going through a process to get back on its feet. All right. And this also explains why we don't see the big lift in the junior companies, these exploration companies, early on in these cycles. Okay. It takes a little while. Why? Go to the next slide. Okay, so I put this little chart together. It's very schematic, but it shows kind of the pattern you often see with explorers who've been through a very dark period like this, very protracted, lack of capital in the markets and such. Their share price gets depressed. I mean, basically, everybody's gotten beat to death over the past two years or so. Okay, but then all of a sudden we see this magical event happen. Like I said, the Friday before PDAC, the gold price rallied, and it's been quite a ride for the past 5 weeks. Okay, this isn't a little ride. I think, given what Tavi and Kevin have said, I think we're into a full-on breakout. It's not, I don't want to jinx anything, but I don't think this is a fluke, guys. I think, the fire, like we've been through 19 or 20, sucker punches where, gold or whatever ticks up a little bit and then whack, it gets, like, oh, here we go again. Well, I think, knock wood, I think we're past that now, or we're going to be past that. And I think we're getting, getting our skates on and getting it back into the saddle here, so to speak. All right. But these doggone junior companies, because they don't have any cash and they don't have any income, they got to go through a process. And what that process usually entails is getting the bejeebers knocked out of them. Okay. They get beaten up because everybody knows they need money. All right. So you see, even though their price is depressed already, they often get beat up more because people know they need money. Okay. So when the company needs to go out and do financing, you see a bit of a letdown in the share price. Why? Because people are going to sell. If they hold that share and then somebody comes to them and says, hey, we got to do a financing. A lot of folks, like, we don't necessarily do this, but a lot of folks just go, oh, I'll sell all of those and I'll buy, again in the placement. that's how it works, guys. It's unfortunate, that's just the fact. All right. So they get beaten up. They get beaten up. All right. So they might lose 20, 30% of their value, beyond the already depressed price they're at. But as soon as they pull that band-aid off, rip that band-aid off and get that financing going, you often see, at least in times like this where metals are ticking up and everything's starting to get back on its feet, you often see a rapid rise in the appreciation in their share price, the market cap and so forth after that. Okay. Why? Because as soon as that band-aid's ripped off, everybody knows, hey, this company now has cash and they can go out and do their business. Their business is to go out and explore. All right. So this is part of the process, but I think we're seeing a lot of band-aids just yanked off right now. And we're seeing a lot of little junior companies as money starts to trickle into this space or trickle down the food chain. We're starting to see a lot of these companies pop up. I've got in the past 4 to 5 days, I've gotten probably 100 solicitations for different financings. It's jaw dropping. Okay. It's jaw dropping. Yeah, it's exhausting actually. Like I'd love to help everybody in some ways, but on the flip side, we can't. It's just not possible. But we're going to be selective. We're going to pick the right ones and we're going to make a lot of money because I think the money that we will allocate, when I say, look, I've got to be careful what I say. I think we will do well because I think we can pick the right companies to invest in that will have those discoveries. You see how the trend goes up, they get back to work and then they start drilling and they make discoveries and da, da, da. I think we're going to pick the right horses in this race. Okay. So that's where we come in. All right. So if you want to look at, individual companies and pick your own, great, go for it. But guess what? Here at Crescat, we can do a lot of that for you. We can save a lot of pain and anguish. Okay. That's what we're about. And we like to pick those companies. We like to allocate money into them so that they can do their work and make discovery and then get back on that Lassonde curve. That the rest of the chart here, that's the Lassonde curve. All right, let's go to the next slide. Now, in the world of financing, they often use the term, the window is open. Okay. There are periods where there is money coming into the space. And during those periods, all the bankers, all the junior company executives, well, at least most of them, know there's money coming in and they are ready to leap through the window. Like they want to grab some of that money. Okay. Now, everybody also knows that window can shut at any moment. Okay. So you often see just an absolute, like race to get money when the window opens. I remember working at Newmont when Pierre Lassonde was there, and he used to refer to it as a cookie jar. And he used to say, when the cookie jar is open, you take a cookie. That was his metaphor for what you see in the financing world and the junior explorers. It is what it is. Okay, right now the window is open, so everybody knows. Okay, so that's kind of what I'm trying to tell you is that that beat up thing and whatever. As soon as you see these companies get beat up and they do a financing, happy days. I mean, you're not guaranteed, but oftentimes they start to appreciate from there. Okay, so as an investor, you want to be able to take advantage of that dippy do, and especially when the window is open. Okay. All right, let's go to the next slide. So I'm going to give an example. I'm not talking about financing per se, but this is a company that we know well and we've supported for many years and we back, and they did a financing. Okay. I'm not going to talk specifically about it, but I'm going to just show you the pattern that we see here. You see the stock come off there a bit for a few weeks. Why? Because people knew they needed to do a financing. They kind of hit a trough there, but as soon as there's investors out there ready to put money in, guess what? She takes off again. Okay. No promises here, but I would say that, if we come back in 3 or 4 months, because this company now has money, that chart hopefully will continue, as they get back to work and drill and do all the work they need to do, that chart will continue to move northward from here. Okay. It's just the way it is. All right. All right, let's go to the next slide. Now, we have a number of silver explorers It's funny when I'm talking about this. Guess what? I just got a call from a broker looking. He wants to sell me on some deals. It's nonstop, guys. I mean, it's unbelievable. I have to just tell people, no, thank you. Anyway, a couple of weeks ago, I talked about silver explorers. Okay, and it seems like ancient history now, but it was only 2 weeks ago. And if people want to go back and listen to that, they should, because I think this list has some pretty good ideas on it. All right. And yeah, some of these companies are going to go through that process, and I don't know which ones and when and how, whatever, but there are some silver stories here that could be very interesting for folks. And I really love all of the companies on this list. Okay. These are companies in our portfolio. I've worked hard to pick these. I think the management teams in most cases are very good. Technical teams are good. The projects are fantastic. They're in jurisdictions where you can build mines. I think these ones will do well. Now, why did I put silver explorers up here? Because this week I've gotten so many incoming emails just asking me, just what silver stocks can I buy? What is out there? I want to know silver. It's like Tavi beating on the table and frothing at the mouth about silver, and it's like, I'm just going to throw this slide up and again so that people know my list or our list of silver stories or silver exposure that they can stick their toes in. Okay, there she blows. All right. Yeah. Okay. Let's go to the next slide. Now we here at Crescat, I'm going to say we're also back in the saddle. Okay. I haven't been able to talk that much lately about new investments we take. For many months there, this is going back a year or two, I was able to talk about, every other video or so about a new investment we would make. All right. Like, what's the story they're in now? Hey, that was fun. Okay. But the money has been pretty tight for the past while. Okay. It's just the way it is. But we're starting to see that money come back. This isn't a message to every broker out there to start calling me, because I don't want my voicemail full. But we are starting to allocate money. Okay, now I'm going to harken back to something I said a few minutes ago. We're not just throwing money against the wall and seeing what sticks. Okay, I want good stories, good explorers, good management teams, good projects, etc., that I think will deliver huge value. Okay, I want the winners. I want those horses that are going to be winners. Okay, and we are going to be able to start talking again here soon about some stories as we invest in these that I think are winners. Okay, so fun times are coming. Okay, this, with a bit of money comes the ability to start talking about this. We'll call it the next generation of explorers that we think could do quite well. Again, I can save you a lot of pain and anguish. Researching all these. Just come to us. It's pretty simple.